It's the weekend market recap. I'm Matt. This is Trade in Your Job. Thank you for joining me. We casually review the week that was. Look forward to the week ahead. Here's how the 11 sectors of the S&P shaped up. There was a major Friday rally that really helped some of these sectors out. Overall, you got defensive sectors at the bottom, utilities, consumer staples, and then in the middle, just pretty much flat. Consumer discretionary, real estate, healthcare didn't move too much. Starting out with the S&P 500, ticker SPY on the daily time frame. Looks like we've got a rising wedge forming, which would be a bearish indicator if it plays out. In the past, in June and July when this happened, and in October, it resulted in further downside. We haven't revisited the low from October of 2022 in the SPY, but that is possible. We're coming off of overbought readings on the daily time frame and kind of neutral on some of the under indicators that I look at. Some of the other indexes look pretty similar. So here's the Qs. You've got, we had a big rally on Friday after some weakness earlier in the week. Last week's market update, I talked about we were a little outside the Bollinger Band, a little overextended. We got a brief sell-off to start the week. It was a short trading week, so three days of downside and then a day of a big rally. But looking back at the other rising wedges that we've had in June and October, they've resolved themselves to the downside. We haven't revisited the low down here. We're coming off of overbought readings, and if I wasn't in a long position already, I'd probably wait for a better entry. IWM small caps, same structure. Had a lot of volume on that rally on Friday in the small caps. It is notable there compared to the other ones, but a lot of rising wedges, and we've seen those resolve downward here. So see if that plays out again there. XBI is biotech, and you can see that they've just been in this chop box since September, bouncing off the lower Bollinger Band, coming up into the middle, and once it reaches the top of the Bollinger Band, it's selling off again. Top of the Bollinger Band selling off, top. So we're at the top now. You saw a sell off again. Those wicks, pointing down, that's a reversal type candle. It is considered overbought. It looks like there was more selling volume than buying volume in those preceding days. The last rising wedge was in June. Don't have any clear rising wedge on this one at this point. It's just in the chop box, so could continue to chop sideways. So if you're playing biotech, it looks like, at least on the daily time frame, when it's getting to the upper side of the Bollinger Band, might be a time to exit, and then by the inverse, you can do that with some leverage plays, LabU and LabD. You could do it by selling or with options. You could buy, puts or calls, depending on which side you're on. So there are some options. Looking at Tesla, I know it's rallied off of the slope of hope that was going on, but another rising wedge here. The last two times this has happened, it's reached the middle, to the top of the Bollinger Band, and then resolved to the downside. So I know there was other things going on in terms of Twitter involvement and things before, but this could play out that same way. We're getting into overbought on the channel commodity index. We're midway on the relative strength index, and the last time, that was as far as we got on these other rallies. So slow stow pointing down, MACD's pretty far apart, so might want to consider taking some profits if you played a bounce here. Amazon, same thing, rising wedge, was overbought, nice rally Friday, but was it a back test of the wedge? Maybe. And then finally, Apple here, few rising wedges and overbought territory. MACD's separated. And finally, Google, who announced layoffs and had a huge rally. So outside the Bollinger Band on the daily time frame, looking at the last time this happened back in November the candle outside there resulted in sell-off. A lot of volume, obviously, on Friday, big bullish candle there, but will that continue? And will there be any speakers that come out this week and try and move the market off of the euphoria from Friday? That remains to be seen. Switching over to bonds, thought I'd start with what the 10-year yield has been doing lately. So we've seen the yields fall, which has been good for mortgage rates and good for bond prices, because when yields go down, price of bonds goes up. So you would expect bond funds to rally, and that's what's happened. But it looks like maybe we've hit a short-term, pivot or turning point for yields. And there's some inflation data that comes out this week that could definitely change things. It looks like it's poised to maybe the yields start climbing again, which would be negative for bonds. And if you look at AGG, when yields go down, bonds go up. So you saw, bonds rally. And there's definitely some gaps here in the chart. It's been a little dynamic overnight. So some gaps to fill on the 10-minute time frame. If you zoom out to the daily chart, could be a rising wedge, and that could have been a back test. It's overbought, so might be a good time to take some profits. If you were playing anything with bonds, you'll see more of the same of this in TLT. This is the 10-minute chart, so just showing you got some, looks like maybe that gap did resolve, and it did try and fill this one down here. So zooming out further on the daily, looks like it's starting to roll over. TLT might be going lower. I said last week this might be forming a double top. It looks like that might have been what happened. Volume was a little higher on Friday on the sell side, and then that kind of Lonely Island candle there at the top of the Bollinger Band. Yeah. As far as HYG on the 10-minute, you got a gap still in the chart there. Most gaps get filled. That's why I point those out. This could have definitely been in a rising wedge or ascending wedge. And it looks like everything's rolling over on HYG on the daily. And then also on Junk, which is another popular bond ETF. Looks like things are rolling over here as well. I think it's really going to matter what the inflation reading comes out, how this plays out, because things look like they're maybe in a short-term top on a lot of these. Looking now at commodities, we'll start with oil on the daily time frame, USO, and we've just been in a chop box here since July, kind of trading sideways. It's kind of similar to biotech. Every time it's ridden the Bollinger Band down, it's slingshotted up to the top of the Bollinger Band and then just bounced around in between those. So if you're looking to play oil until the trend changes, looks like it's sideways, and right now we're into an overbought area. And in the past few months, whenever we've gotten into overbought on the daily time frame, it was a good time to take profits and maybe go the other direction. You can play this on the inverse. There are a few leveraged ways to do that. There's SCO for the inverse of oil. It's a two times leverage. And then there's UCO on the bull side. So when you play leveraged things, you get something called time decay. And so some people would choose to short UCO via puts because of the time decay that is on your side. So I'll probably do a video about that kind of strategy at some point. But in the chop box here, until proven otherwise, this is where oil's kind of turned around before. So looking at natural gas, still got demolished again this week, but we got a falling wedge, which is a bullish indicator. Looking back, doesn't mean it's going to play out immediately, but it's looking like it's coming to a point here. Never even did that in June and July, but did have a big rally to the upside. There's little demand out there. It's been a pretty mild winter, I think, across the globe, so a lot of natural gas depends on the reports and usage that come out every week. So there's no saying that this is going to resolve the same way that it did the last time, but just pointing it out to you in case you were following it. Looking at gold on the daily time frame, I drew a lot of lines here, but we were in a long-term downtrend, up until November, and then we got a breakout above that trend line. This horizontal line here in the 161 area, this is a breakaway gap here, and we haven't gone down and tested that breakaway gap yet, but got an ascending wedge, so might be time to take some profits there. If there's a lot of fear that enters the market, this could definitely continue higher. So when you sell out of positions, some people choose to sell out a portion when they have profits and hold on to the rest in case it keeps running, or set some sort of stop loss. So not saying you should fully exit a position or anything like that, but maybe a place to take some profits or move your stop loss up or something like that. And then Dr. Coppr was in this trading range between 3.2 and 3.9 for a long time, and then we've broken out of that. So chances are we'll go back and retest the breakout point and see if it goes higher. But if a lot of these things continue higher, that would usually mean that inflation is going up, which would be bad for growth type stocks, because it would mean that the Federal Reserve is going to have to keep aggressively raising rates. So if some of these things continue to rally, that could be a negative for the overall market. Looking first at Bitcoin on the daily, obviously we've had a really strong rally. The Bollinger Bands have been pushed, very high, very fast. Looking back to the last few times this has happened, it hasn't been sustained. I know there's that saying, hold on for deal, HODL, hold on for dear life in crypto. And this feels like one of those rallies. And it looks like more of the same in Ethereum, but looking across, we're testing that resistance again in the last few times that it's been in that area. It's gotten rejected. So a few rising wedges on this chart in the past, and we've got another one. So that's the common theme here, is that a lot of rising wedges. MACD starting to curl over. Switching back to Bitcoin, looking at those other indicators, really, really overextended on the moving average convergence divergence. Got a negative divergence in the channel commodity index because you got a high here and a lower high here while price was making higher highs. And so the last time that this happened back in November, that resolved to the downside pretty quickly. So if you've got some profits there, wouldn't hurt to maybe take some off the table. You'll never go broke taking your profits. So, and here's just the crypto week ending January 20th, and you had 10% higher in Bitcoin, Ethereum another 6, and Solana another 10. So they already had huge rallies last week. So it did continue a bit further, and that's always a possibility, but just playing probabilities, it's not likely that continues indefinitely. Looking at the trading week ahead on tradingeconomics.com, I changed it to things that are considered 2-star impact or could move the market. Not much happening on Tuesday, Wednesday, but then on Thursday you've got durable goods orders and GDP growth rate. And then on Friday, that core PCE price index. So early in the week, not too much in terms of economic news. No real Fed speakers for this week. But Thursday and Friday looks like it's got some potential to shake things up. So that's all I got for you today. I appreciate you joining me. If you got any questions or comments, please leave them below. Thanks so much.